Did Warren Buffett buy $5 billion in preferred Lehman Brothers stock? Many people believe this to be true, but the reality is a bit more complicated. In the world of investing, Warren Buffett is considered a legend. Back in 2008, the financial crisis was in full swing. At the time, Lehman Brothers was facing significant troubles, and many investors were skeptical about its future. Lehman was a major player in the subprime loan market, which was fueling uncontrollably high economic growth. However, because they were given to borrowers with bad credit records and low incomes, these were by definition the riskiest loans. Lehman Brothers was still vulnerable even after losing $50 million on the closure of its own subprime mortgage business in 2007. The corporation made a disastrous judgment when securitizing large mortgage packages for later sale. It sold the best mortgages and retained the worst. Lehman Brothers, once a Wall Street powerhouse, had been hit hard by the subprime mortgage crisis. Lehman Brothers had hundreds of thousands of creditors, counterparties, and investors when it filed for bankruptcy, owing over $600 billion in debt. The market for interbank lending, in which banks lend and borrow money from one another to satisfy their short-term liquidity needs, was severely disrupted by its default. Because they were afraid they might not get their money back or that they might need it themselves, banks started to lend to one another less frequently. Interest rates spiked sharply as a result, and both consumers and businesses were unable to obtain credit. The credit crisis hindered economic growth and activity by lowering the availability and affordability of bonds, mortgages, and loans. In March of 2008, Richard Fuld, the CEO of Lehman, made the initial call to Buffett, suggesting that Berkshire invest several $billion in the failing bank. Buffett, known for his shrewd investment choices, saw an opportunity. Buffett informed Lehman Brothers CEO Richard Fuld during their first phone conversation that he required the executives to invest on the same terms before making any investments. Fuld objected to this Buffett's proposal, claiming that officials at Lehman already got a sizable portion of their pay in Lehman stock. Buffett took Fuld's hesitation as the first warning sign. Buffett also thought it strange that the day before he and Fuld had even spoken on the phone, Lehman had written a draft letter to Lehman workers announcing a deal, replete with deal size and price. Even more bizarrely, Fuld never seemed to see the draft of the letter and was unaware of its origins. After the call, Buffett devoted the remainder of Friday to studying and assessing Lehman's 10K filing. During this time, he pinpointed several areas of concern, such as Lehman's exposure to derivatives, its securitization activities, and its real estate and high-yield investments, all of which are central to the credit crisis. Buffett found out on Saturday that Fuld had not disclosed to him during their phone discussion that Lehman had a $100 million issue in Japan. Buffett's choice to stay away from Lehman was cemented by these two sets of problems. Unfortunately, Lehman Brothers filed for bankruptcy shortly after Buffett's investment in Goldman Sachs. This led to massive losses for investors and shook the financial world to its core. In 2008, during the financial crisis, Warren Buffett did invest $5 billion in Goldman Sachs, not Lehman Brothers. This investment helped stabilize the markets and boosted confidence in the banking sector. While Warren Buffett did not invest in Lehman Brothers, his actions during the financial crisis are still studied and admired by many investors today. His decision to invest in Goldman Sachs showed his confidence in the banking system and his ability to make strategic investments during turbulent times. In 2011, Goldman Sachs repurchased its preferred stock for $5.64 billion and awarded Buffett a $500 million bonus. Buffett then exercised his option on 13.1 million common shares, valued at approximately $2.07 billion. Berkshire Hathaway earned a profit of $3.7 billion. Berkshire Hathaway still has $3.13 billion worth of Goldman Sachs stock 10 years after the crisis. So, while the story of Warren Buffett buying $5 billion in preferred Lehman Brothers stock may not be entirely accurate, the truth behind his investments during the financial crisis still holds valuable lessons for investors. Remember, investing always involves risks, and it's crucial to do thorough research before jumping into any opportunity. If you enjoyed the video, don't forget to subscribe to our channel for more insightful content. See you in the next video.